and Assalamualaikum. Today I would like to present about Islamic business venture key structure. An Islamic business venture is not simply a business that earns halal income. It is a business model that integrates Sharia principles, ethical values, and sustainable development into the entire business processes. First, the foundation is Tawheed and Amanah. An entrepreneur understands that business resources are a trust from Allah. Therefore, business decision must be responsible and ethical. Second is Maqasid al-Sharia. The objective is not only to maximize profit but also to create humans and society welfare, including the protection of wealth, life, intellect, family, and wealth. Third, the business must be Sharia compliant. This means the products and services must be halal while avoiding riba, fluoro, maisir, fraud, and other prohibited activities. Fourth, Islamic ethics and governance are important. Entrepreneurs should practice honesty, justice, transparency, and accountability while governance mechanisms ensure that business activities remain Sharia compliant. Fifth, the venture should use Sharia compliant financing such as mudarabah, musyarakah, murabahah, and ijarah depending on the nature of the business. Sixth, an Islamic business venture has a wider responsibility towards society and the environment. Therefore, the business should create benefits for employees, customers, communities, and the environment. Finally, innovation and sustainable performance are important for long-term success. The business should create halal and beneficial products while balancing profitability with Sharia compliance and social impact. In conclusion, an Islamic business venture can be summarized as profit while propose innovation with ethics and growth with Sharia compliance. This is what discusses Islamic entrepreneurship from a purely profit-oriented conventional business. That's all.
Next, I will discuss the reflection and critical analysis of Islamic business venture. From a critical perspective, Islamic business venture offers several important strengths. First, partnership and alignment of interests. Through partnership-based arrangements such as musyarakah, investor and entrepreneur are directly connected to the performance of the business. This creates a greater alignment between the parties compared with a conventional creditor-debtor relationship. Second, real economic contribution. Islamic business venture emphasizes investment in identifiable and productive business activities, which strengthens the connection between financing and the real economy. Third, risk and return participation. Instead of receiving and predetermined return regardless of business performance, the participating parties are exposed to the actual performance of the underlying venture. This reflects the risk-sharing principle of Islamic finance. Lastly, Sharia-oriented investment ensure that the investment structure and business activities are guided by Sharia principle, including the avoidance of riba, excessive gharar, and maisir. However, their strength also creates several practical limitations. One important challenge is information asymmetry, because entrepreneurs or business managers may have more information about the actual performance of the venture than investor. This creates the need for stronger monitoring and governance to ensure transparency and accountability. Furthermore, because investors participate directly in business performance, they may face higher business and investment risks, including the possibility of losses. Finally, partnership-based structure can involve greater implementation complexity, particularly in terms of documentation, monitoring, governance, and Sharia compliance. Therefore, the key reflection is that Islamic business venture provides a strong Sharia-oriented and partnership-based financing model, but its effectiveness depends on strong governance and transparency, effective monitoring, and proper risk management and practice. Moving to the next slide, this slide highlights the gap between the theoretical principle of Islamic business venture and their practical implementation. In the theory, Islamic business venture is built on partnership and mutual trust. However, in practice, trust alone is not sufficient. It must be supported by strong governance, transparency, and accountability. Secondly, equity participation and profit sharing reflect the partnership-based nature of Islamic business. In practice, however, this requires effective monitoring and accurate reporting. Therefore, information quality and proper monitoring mechanisms are essential. Thirdly, share business exposure means that investors participate in the actual performance of the business. This also creates greater uncertainty because returns depend on business performance. Therefore, effective risk management capacity is necessary. Fourthly, although a Sharia compliance structure is fundamental, Sharia compliance alone does not guarantee business success. It must also be supported by commercial viability and sound business management. Finally, Islamic business venture can support entrepreneurs and innovation, but its success still depends on the capability of entrepreneurs, market conditions, and the overall business ecosystem. Overall, the key reflection is that the principles of Islamic business venture are strong in the theory, but their effectiveness depends on how well these principles are translated into actual business practices.
So next, I will be presenting on the role of risk sharing in modern Islamic business venture. Risk sharing plays an important role in modern economies because it changes the traditional relationship between financiers and businesses. Instead of transferring all risk to borrowers through fixed debt obligation, risk sharing mechanisms distribute risk among different stakeholders. Firstly, risk sharing contributes to financial stability because investors are encouraged to evaluate projects carefully before investing. They reduce excessive leverage and lowers the possibility of financial distress. Secondly, risk sharing supports entrepreneurship because businesses can obtain funding based on their potential rather than only relying on collateral. Through Islamic financing contracts such as musyarakah and mudarabah, investors participate in both profits and losses, creating a partnership-based relationship. Finally, risk sharing promotes economic inclusiveness by providing opportunities for SMEs and entrepreneurs who may not have sufficient assets to obtain conventional loans. Moving to the next point, which is the critical challenges and further outlook. Although risk sharing provides many advantages, there are several challenges that limit its widespread adoption in modern economies. One major challenge is the complexity of implementation. Unlike conventional lending where returns are predetermined, risk sharing arrangements require continuous monitoring of business performance. This increases administrative costs and requires high level of transparency and trust. Furthermore, modern financial markets are still largely dominated by debt-based financing because investors often prefer stable and predictable return. As a result, Islamic risk-sharing models such as musyarakah and mudarabah remain relatively limited in practice. However, the further potential of risk-sharing remains significant. With increasing the interest in sustainable finance, ethical investment, and support for SMEs, risk-sharing models can become an important alternative approach. Therefore, stronger regulations, better governance, and greater awareness are needed to enhance its adoption in modern economies.
Mr. Aisyah binti Muhammad Salahuddin. This slide explains the evolving dynamics and future outlook of Islamic private equity and venture capital. Traditionally, Islamic PNVC were based on musyarakah and mudarabah partnership, where investors and entrepreneurs share both profit and risk according to Sharia principles. Today, the industry has evolved with the establishment of institutional Islamic PE and VC funds, providing more structured funding for startup and growing business. At the same time, digital investment, platform, and fintech technologies have made Islamic investment more accessible, efficient, and transparent. Looking ahead, the integration of environmental, social, and governance, which is ESG principle with Islamic finance, is expected to strengthen sustainability and ethical investment. This creates greater opportunities for innovation while remaining aligned with the objective of Sharia. In conclusion, Islamic PE and VC are transforming from traditional partnership models into a modern, technology-driven and sustainable investment ecosystem. Slide compares the current dynamics and future challenges of Islamic private equity, PE, and venture capital VC. Currently, Islamic PE and VC are focusing on strong Sharia governance, Sharia screening, and transparency to ensure investment complies with Islamic principles. The industry is also adopting language, artificial intelligence, and blockchain to improve efficiency and support investment in SME, startup, and the higher industry. In addition, there is an increasing emphasis on ESG, SDG, and green finance to promote sustainable development. However, the industry still faces several challenges, which include information asymmetry, moral hazard, limited exit opportunities, regulatory differences, low public awareness, and high investment risk. To overcome these challenges, the industry needs better monitoring system, stronger governance, diversified exit strategies, harmonized regulations, greater financial education, and professional fund management. In conclusion, by addressing these challenges, Islamic PE and VC can achieve more sustainable growth and remain competitive in the global investment market. Slide compares the current dynamics and future challenges of Islamic private equity, PE, and venture capital VC. Currently, Islamic PE and VC are focusing on strong Sharia governance, Sharia screening, and transparency to ensure investment complies with Islamic principles. The industry is also adopting language, artificial intelligence, and blockchain to improve efficiency and support investment in SME, startup, and the halal industry. In addition, there is an increasing emphasis on ESG, SDG, and green finance to promote sustainable development. However, the industry still faces several challenges. These include information asymmetry, moral hazard, limited exit opportunities, regulatory differences, low public awareness, and high investment risk. To overcome these challenges, the industry needs better monitoring system, stronger governance, diversified exit strategies, harmonized regulations, greater financial education, and professional fund management. In conclusion, by addressing these challenges, Islamic PE and VC can achieve more sustainable growth and remain competitive in the global investment market. Slide compares the current dynamics and future challenges of Islamic private equity, PE, and venture capital VC. Currently, Islamic PE and VC are focusing on strong Sharia governance, Sharia screening, and transparency to ensure investment complies with Islamic principles. The industry is also adopting language, artificial. Now, I would like to explain the future outlook of the Islamic private equity, PE, and venture capital VC ecosystem, as well as how Project Ar-Rahman can be developed within this ecosystem. In the future, Islamic investment can become more advanced through the use of technology and digital innovation. For example, AI investment analytics can help investors analyze business performance and investment risk more efficiently. At the same time, blockchain and tokenization can improve transparency and potentially support new forms of Islamic crowdfunding and digital Islamic venture capital. Another important direction is sustainable finance and cross-border investment, which can create more opportunities for Sharia-compliant business to attract investors from different markets. For Project Ar-Rahman, the project can be supported through an investment income platform or IAP, with Bank Muamalat Malaysia acting as a sponsor and facilitator. The investment can be structured using musyarakah, where investors participate in the business and share the profit based on equity arrangement. Overall, Project Ar-Rahman shows how traditional Islamic financial service can be connected with digital investment, future capital, and profit sharing mechanism to create a more innovative and sustainable Islamic finance ecosystem. That's all from me. Thank you.
Okay, I will continue for the part is conclusion and recommendation. First, it is a combined Sharia tenets with economic goals and social justice, which is beyond profit. For the utilize the mudarabah and musyarakah rather than conventional guarantee profit lending. It is a risk-sharing paradigm. For the strictly prohibits riba, which is interest, gharar, uncertainty, and maisir is a gambling, is a ethical boundaries. Last, shares equity structure with conventional venture capital and private equity, but prioritize is a societal well-being and real economic activity over the simple shareholder maximization is a constraining motive. Next, for the gap between theory and practice is an important context of conclusion and recommendation. First, implementation friction. It is a strong theoretical foundation, do not automatically guarantee the practical success. For the operational hurdles, this is a true risk-sharing is currently hindered by asymmetric information, adverse selection, and high monitoring costs. For the institutional risk aversion, it is the financial institutions tend to bypass the equity-based contract in favor of a safer, more stable investment instruments. Last, for the redefining the success and the path forward, first, the holistic economic framework. IBV, which is Islamic business venture, then a financing alternative. It integrated ethics, governance, and social considerations. For the broader success metrics, the success equal profitability plus entrepreneurship growth, financial accessibility, fair wealth distribution, and achieving the maqasid al-Sharia. Last, for the regulatory imperative, BNM, Bank Negara Malaysia, and the SC, Securities Commission, must actively improve the governance and regulation to keep the Islamic business venture competitive and sustainable.